currency moves higher to start the week, trading in the range of about 111.5 up to 112.88. We're closing out at 112.25. Last week it did trade above 112, but it struggled to get above and hold the 112 level. Well, today it finally did, much of that coming on the heels of Friday's credit downgrade from Moody's to the U.S. government. Obviously, we saw downgrades in 2011 from S&P, and we saw them in 2023 from Fitch. So really just joining the other rating agencies, but ultimately pushing the dollar lower and helping to prop up the euro, which again has struggled to move above the 112 level over the last week. But again, seeing the close today higher at 112.25, its first close above 112 since May 9th. Now, what does this mean for volatility? Well, as I mentioned, the U.S. downgrade, that runs ripples throughout the markets. We did see volatility moving higher. The euro has seen volatility nudging higher really since the middle part of last week. So today's move higher isn't just isolated to Friday's downgrade, but it actually started prior to that. Wednesday of last week, we started to see volatility nudge higher, and it continued to do so today. Lastly, let's talk about positioning. What are speculators doing? Well, as of last Tuesday, so prior to Friday's U.S. downgrade, we saw speculators adding to their net long positions, and this is despite the fact that we heard from Fed speakers talking about the Fed not wanting to cut rates anytime soon, which helped prop up the dollar. So we saw speculators in the euro adding to their net long positions midweek last week before all of this information came out.